All right, everybody, we are back. Alex and I are here today to talk to you guys about a very important topic, something that we get questions about, I think, right, Alex, pretty often. How do you really apply these systems in the active market every single day? So I want to take some time today. Alex is going to share with us some of his trades over the last week. I'm going to share with you some of my trades, and you guys are going to see how we're using all three signals, the A1, the D1, and the D2, on a daily basis to identify not only repeatable patterns, but it's important that we identify them as profitable patterns. They aren't just the traditional support and resistance zones, pennant formations, wedge formation, all that stuff that you've heard people talking about. I think a lot of people are confused when they hear about us, Alex, that they think that it's the same thing, that they think ASFX is the same type of technical analysis that they've heard elsewhere. So I want to make sure that we really drive home the uniqueness today, and I want to show you guys, like I said, through some live examples about how that's working for us. But Alex, you want to start us off here with EuroCAD, because I know this was a really great trade for you over the last week. We're actually looking at it from what is this here? Tuesday into Wednesday into Thursday and then into Friday, where you were able to trade it both ways, correct?
Yep, 100%. So this was, in our system, it's called a D2 signal, which is a counter trend signal that we use to plot like bottoms and possible reversals or retracements. This is when you want to try and trade the retracement or possibly try to catch the bottom. Now, when I was looking at this D2 was actually being formed out based off of a higher time frame support level, where in the past, prices come to this exact level 3 or 4 times and has rejected and then has come up off of it for a full retracement. As you can see right there, Austin has it on the left. That's 1 point. But even if you drill all the way back on the daily, you could find this point being respected multiple times.
All the way back to here. I see that.
All the way. Yep, see it right there. So about 4 times where prices come down to this level on the higher time frame and is rejected. So for me to spot this support level and as well as a D2 signal forming out here was enough confluence for me to actually take this trade and try to plot a counter trend on it to a higher time frame resistance level. So the way we use D2s is we're trying to plot divergence point 1, which will be usually the first point of like oversold or overbought, to another structure point, to another divergence point 2, which you could see, yep, one's right there, and then the other one clearly right there.
And the way that I'm going to just cut you off for a second, Alex. The way that I like to say it too, just because it's helpful, the reaction point 1, everybody has to be, if you've seen the training videos that we put out for you, it has to be on your RSI, either the high or the low. And then like Alex just said, that second reaction point where he's identifying this divergence is at the price action high or low that comes to the lower point. In this case, it's a low, where the price dropped lower, but the RSI actually came higher. That's the divergence that we're looking for. And that set him up with good risk reward here. Do you remember, was your stop around 50 pips, something like that?
Yeah, exactly. So it was around 50 pips.
And what were you looking for on target? Like, where were you trying to take this thing?
So for me, my initial target, I wanted to swing this, right? This idea for me was a swing. Some people, they traded, where I know a couple of our members took it as well, but they took profits right at the 800, where exactly where it hit. But I was looking to swing it, so I wanted my target to be at the higher time frame resistance, where that I plotted like in the 4 hour and the daily. So that was about 215 pips away. So yeah, exactly.
Somewhere up here.
Yeah, somewhere exactly right to where those
from where you saw it bounce down twice previous, because you assumed, hey, if it comes back up to the price that it's bounced off of twice already, then it's going to probably bounce again. And that price was like 153, somewhere about there, and you were in at 151.
So it was about it was a little over 200 pips with a 50 pip stop loss. So technically a 4 hour trade. And so I was looking to swing this, so I actually held the full trade at full size, but with a very small risk because I didn't want to like really manage it. I wanted to be in the trade with a risk that I was comfortable with. Either way it played out, either it hit target or it hit my stop loss, and I was totally okay with it.
And then as it's moving, you're moving the stop loss up, I'm assuming, to manage it, to kind of mitigate any of that profit that you could get back. So then as we develop into Thursday and Friday, I see divergence on top here, and I think you saw this as well. So this is kind of what set you up for the trade at the end of the week here on Friday. Is that what happened?
Exactly. Yeah, so exactly. So right at actually reaction point 1, if you see right at reaction point 1 on the RSI and the price action for the divergence up there, that's actually where I did take profit. That's when I got out of it.
Got it.
I was already safe. And as the day developed, I didn't pay attention to it anymore, because once I get done with a trade, I kind of just want to, be like, all right, I'm done with that.
Sense.
And
Yep.
then when I was scanning around on Friday, I actually noticed that the same divergence was forming at that level. Now it was at the resistance. The same play from earlier in the week was developing, but just at the resistance level now.
Right.
Um,
Opposite, like just instead of going long now, it's coming short.
yeah, exactly.
So
So
it's the
it's
same
literally
signal,
the same
everybody. That's what
pattern.
he's saying. And now even I think this one was more solid in my opinion, almost because you get this third pop to the top where the RSI
Exactly.
tries to hold through and the price action tries to hold through. But even if you use just this, simple support and resistance zones like we showed in the training, where you use the wick to draw it, look at how it can't get above and stay above that zone. So when you get the signal on the D2 to come back down, you were able to identify that and rock it short. You took it down here to the 200, or did you take it all the way to the 800?
I also had the same mindset as the earlier trade, which means like I'm still holding it until I get to that support zone. And as you can see, the price action is still clearly down, and there really isn't an exit signal on it. So
So
I'm
you're still
actually
short.
hoping that, yeah, I'm still currently in the position. Literally the
Nice.
same thing. It's crazy because it's still 50 pip stop loss, and the take profit is low over 200 pips again. So
That's
I'm going to
awesome.
see how it opens up on Monday, but literally the
But I
same,
think it
just
makes
flip
a lot of
flop.
sense because you're trading in a range here. We can see that it is in consolidation. So when that top and bottom are set and you're testing in between, it makes sense to trade in between. It does. So I love this idea. I love everything
Yep.
that you did here. And I really respect the way that you managed it by saying, look, I'm going to acknowledge the D2 on the bottom and respect the D2 on the top. And then you've now taken it a step further to saying, I'm not going to just respect the top. I'm going to act on it and take it short as well. Tell me,
Exactly.
how did this feed into the Euro GBP idea here? Another D2 idea, same day. This is Friday now. So were you short Euro GBP first, or were you short Euro CAD first?
EuroCAD was first. This Euro GBP actually came in on Friday, right before
Got
NFP
it.
news. Yep. So
Got it.
this was actually my first trade of that day, Euro GBP, which ended up really nicely. So it was the same
So
thing
you
we're
were short
seeing
somewhere
here.
around that purple circle.
Actually no, I was actually up higher. So you see where, yeah, right where it broke the 50 EMA. Yep, just right up around there. Yep. I actually took
Right
my
there.
entry on the 1 minute there as because when I was looking at it, the price had already pulled down off the 50 EMA, and I kind of wanted to wait for a retracement or a retest of that 50 EMA just to validate the fact that it's going to come down. Because if you get the
Because
nice
that would give
retest
you the
on
lower
it,
structure, right? That's what you're saying. It would
exactly.
get like to be a lower high. So if you have a lower high and you're breaking lower, then you would assume that that's going to continue as downward structure.
Yep, more
Got
confirmation,
it.
which it did, which was actually perfect right there. So the setup was relatively the same. You're getting reaction point one on the RSI and reaction point two on the price action that confirms divergence. You can see price action on the chart is making a higher high while the RSI made a lower high. So
Yep.
that's our divergence. And then the moment it breaks to 50, I'm looking for entry short. I waited for a pullback on the 1 minute to then get in short, and I actually took profits at the 200, right, literally as it broke it there. And I only had I think it was a 14 pip stop on this. No, 12 pip stop, 24 pip take profit, um, right at the 200 because I didn't know that it was going to fall all day like this. And being that something that we preach when it comes to D2s is to be like more hands on with it because since it
Mm-hmm.
is counter trend, we don't know if it's gonna just retrace to the 200 to the 800 or come down just a few pips to pop all the way back up into the trend. So you want to be very cautious when taking these trades.
Yeah, and I think that drives home a really important point that as much as these D2s can be beautiful reversals and they can run for you like this one does, the next trade that we're going to show you is my trade on a D2 this week that didn't turn out to run through the 800 EMA like this one did.
Mm-hmm.
And that's why I think trading them with this, it's not like I'm not hesitant to do the D2, but I'm aware that these things are reversal trades, and the market that we're trading being in the Forex market is a trending market. They
Yep.
always say the trend is your friend. So if it
Mm-hmm.
wants to pick back up in that overall trend, if this wanted to come back up off the 200, by you getting out of that trade, you're respecting that as well, which I think is always the way to go towards it. Because like we've talked about, these patterns are going to be here for a lot longer probably than you and I will even be around. You know what I
Yep.
mean? They've been around before. So we
Exactly.
have to respect the market in that sense. And like I was saying, if you just take a look at the GBP CHF, this was my T2 trade, right? Same idea here, everybody, with reaction point one at the RSI high, reaction point two at the price action high. So if you respect that within a third jab here, right? I love that where price comes higher, can't comes right back down through the divergence. I love that. So then when we do another thing that I love, which is break the 50, retest the high, but make a lower high. You see how we're making lower highs, and then we come back through the 50. That's where I really thought, okay, the top is set about 30 pips away. That's where the stop is going to go. And I'm going to look for this thing to come all the way down. I thought about 140 pips to the 800 EMA down here. as you can see, it doesn't do that. It comes down about 100 through the 200. I actually got out of the trade before I went to bed right here. So I left a little bit of profit out there, but that's okay because like we were just saying, I'm very grateful to even be on the right side of the timing on these D2 trades. So they're powerful reversals that sometimes can run for multiple days, but at the same time, the respect for the idea that trend is your friend and this could pick back up like it does on Friday into its overall trend, you have to respect that as well, because you can see what would have happened if I married this idea. You know what I mean?
And weren't proactive in actually managing the trade. So that's
Exactly.
like a tip that I could really give for D2s, is that you want to be proactive managing these trades. It's definitely not a trade where you set it and forget it. In trending trades, you could do that, but not in counter trends. Not in my opinion, at least. Like exactly like you said, they can run for for days if we catch that top or bottom, but we never know that. So you always want to be very proactive at managing counter trend trades.
Absolutely. And let's kind of flip the counter trend trades a little bit from the D2 entry, which is the reversal signal, to now talking about the D1 and the A1. Now, these are in trend trades for those of you that are new to our group and our system. But these trades for me, and I think for you, Alex, these are the bread and butter. These are the powerful trades that are going to put 3, 4, 5% in your account on any single trade. And then you can hit a couple of those every week, and you can start to see some good returns as time goes on when you are on the right side of the trade, which, like I just said, and I think for both of us is always we'd rather be in trend than counter trend. We'll still take the D2, like we just showed you guys, but these are the trades where we're much more comfortable, where you can identify a trend. If you take a look, this is AUD USD. You can see all week. If you go from Tuesday into Wednesday, into Thursday, and then even into Friday, the move is clearly bullish. Look at Monday. From the start of the week, every day it was rising. So coming into Friday, sitting on the 50 EMA, which is this blue EMA you see price stop at, that's a really solid level that we look to trade off of pretty often. And Alex, and we'll talk about the GU comparison too in this video because I want to show that. But me, and I think again, you're the same. The 50 EMA is that serious level that if we can get a good entry off of, you're going to expect some extension off of that, just because it's solid support, but not broken to the extent that the trend is dead, right?
Definitely, 100%. And if you see a signal present off of the 50 EMA, like a divergence signal, like we're about to discuss, most of the time you'll get even more confirmation, which leads to our second entry signal, which is the A1, which is what we're also going to show you right here.
Right.
And that's even more confluence to your overall bias, which will pretty much make it more likely to come true.
Absolutely. Absolutely. So I just put a blue box around the candle that Alex is talking about. So what ends up happening here is we see the support at the 50 EMA. We see price come to it. Jake McCara, a couple of the guys that are actually trading in Australia, they were even in this trade because, again, this is in the Asian session. So you could be up. For me, that's nighttime. For some people, that's their morning.
Yeah, that's normal
at any time. Right, exactly. But they were all able to identify the same D1 entry here with the RSI setting its low about 4 hours before midnight. About an hour later, price comes lower and the RSI clearly is rising. So you see the divergence set in at that 50 EMA on the 15-minute chart. And then you see the blue box that I drew. About an hour after that, you get the A1 entry. So let's just say you're really cautious and you're like, you know what? I'm going to be careful. I'm not going to get in too early. I want to make sure I'm not losing my trades. Fine. You don't take the D1. Well, guess what? Beautiful trades, super high probability trades, show us through our back testing that this is the pattern you'll see, where it goes from a D1 entry into then an A1 entry. And when you see that A1 entry line up, like I have shown on that in that blue box, your risk is very clearly defined at the bottom of that, at the entry price of, at the open price of that candle. So you know where your risk is defined and you know how it should react accordingly to the 8 EMA. So when you can tag team both of these entries together, it lines up for really awesome trades, which is why I was so happy to share this and why it made me so happy to see everybody in this trade too. You know what I mean? When I woke up the next morning, everybody had already made 6, 7, 8 R on their risk with an 8 pip stop. It goes 75 pips. It's a crazy rip.
Yeah,
it's
crazy. And I was, like I said, I was looking at this like through the overnight too. Like, so when this was forming out, it was around 9 p.m. for me. And unfortunately, I just wasn't able to stay up enough to actually take it. But I saw it forming out, but yeah, I didn't get to take advantage.
Talk about that for a second too.
Like,
because you have, with all of these hours that we can be trading these trades, you and I have a little bit of experience that we can impose hopefully on some new traders to tell them that you can't try to trade every hour of every day, right? Like you're going to burn out. You're going to go crazy. It's like impossible.
Definitely.
Never seen anybody do it successfully.
Yeah, 100%. I mean, the FX market is special because you can trade it. It's open 24/5, right? Technically, or it opens half a day on Sunday. But it's a revolving market where you could technically find trades anytime, but it's definitely not sufficient to try and trade all the time. My personal schedule is I'm in New York, so I trade London session until about like 11 a.m. So for me, I'm up at like 3 a.m. trading to about 11 a.m. But that doesn't mean I'm trading that whole way. Austin, you'll know that sometimes I'll be done trading by like 6 in the morning. If I hit my trade, I'm done.
Right.
You know,
Me too.
uh, and I think
Yep.
that's very sustainable because as long as you hit your target for that day, it doesn't really make sense to keep trading because yeah, the more you expose yourself, you can make more money, but you could also as equally quickly lose that money by overexposing
If not
yourself.
more likely at that point, because you're
More
riding
than
a high of a win and you think you can't lose, right? So
Yep,
that's why
exactly.
even on the side of like, look, we just spent 20 minutes almost now going over the precision, and we didn't even really get that detailed like we do in the course, but we just went over and showed you guys the details in our pattern. So then to not have that detail in your plan to know your own bias where you might act that way is foolish. So with the way that we trade, you guys hopefully can hear it through me and Alex, it isn't just about the technical side of the chart. And it goes so much deeper than that to your risk management, the plan that you're using every day. And then now I'm taking it steps deeper with tracking my own fitness, tracking my own heart rate, trying to really optimize myself to perform at my best. Because hopefully what we're showing you guys here in this video drives home the point that these patterns that we trade are not that complicated. That's why we're putting it out for you on the internet for free, because it's not like a big secret. These are free indicators. This is general, information with price action. These are all from regulated brokers. This is all out there, but it's the layer under that technical stuff that really I think makes or breaks you in the long run as a trader. Anybody can show up and hit a pattern and make some money and feel good about it, but if you really want to build a business, it takes a lot more of an understanding, like Alex and I have hopefully been getting across to you guys in today's video. But I want to wrap up the video with one more example because it's a really good one for those of you that are listening this far through and you really want to learn how to apply this into your trading and really make smarter trading decisions going forward, like you always hear me say. So let's take a look really quick, Alex. This is Euro JPY. Now, this has been something we were long biased for multiple days. Remember from like last week, I was showing you I was buying this. And I actually have a recap video of that on the YouTube channel too. So it's out there. We know that we've been long biased for weeks almost, right? A week and a half.
Yep.
So on Friday with NFP, I know you guys were looking for D1 entries in trend. Everybody now watching this video knows that it's a D1, it's in trend, but you were under the 50 EMA. You guys see that with that blue line. And I threw the flag in the group chat and I said, Alex, just so you know, like pay attention to this. Excuse me, pay attention to this. You're under the 50 EMA. And then I compared that to GBP USD, which was above the 50 EMA in basically a parallel setup other than that fact. What lesson would you share with everybody that this comparison showed you, Alex?
The lesson that I would say to anybody that knows the system or is looking to get into the system, and then when you start learning it, is always take the trade above the 50 EMA, as we've seen here. Um, because once you start learning the system, you'll start getting more familiar with like what roadblocks are in your way. And technically, if you're trading under the 50 EMA and you're trying to get that D1 entry, you can get a pretty clean one, which we did on EJ, EU, GU. They were literally all the same. But the fact that the difference was that GU didn't have the same roadblocks as EU or EJ. So being under that 50 EMA just makes it a little less probable. Can it still rip from that level? Of course it can.
Of course, of
Time
course.
and time again, it rips from the level.
But
But
it's about probabilities.
exactly,
That's really
that's exactly
that's
what I
why
was
it
looking at.
matters.
Yeah, when it
Yeah.
comes to trading, you want the probabilities in your favor. And if you're looking at these two and comparing them, you want to take GU over EU because there's a higher probability that GU is going to run, and which it did. And I was kind of on the wrong side of the fence of that trade, and I ended up getting stopped at break even on EU when I should have been in GU.
But I think that now your experience, it doesn't only make you a better trader, but we can put this information out hopefully for the people that are sitting all the way through our video and they take some value out of this. They can then use that because the selectivity of how we are very picky with our trades, I think is what makes us unique at ASFX. Again, it isn't the technical stuff. It is. We are good at technical formations. We have indicators that help confirm that, but it's, like I said, deeper than that. So when you can have risk management and have a checklist of rules that you can compare setups like this, where you can look, I like EJ, I like EU, and I like GU. Well, all of them have space on ADR. All of them are out of the Asian range. All of them have great EMAs and great TDI, but one of them is above the 50 and the other two are not. Boom. That's that selectivity of being able to go down the checklist and move over into the highest probability trade, in my opinion, is what makes the difference. Again, in the long run. In the short term, you're right. They all could have ripped. You could have made money on all three of them, or they all could have been losers. But let's just say they all ripped. They all worked. Cool, you made money on that setup. But in the long run, this setup above the 50 EMA is the setup that's going to make you more money and avoid losses like yours, where you get stopped to break even, which isn't a loss, but you know what I mean? That easily could have been a loss for somebody else because it didn't
Exactly.
move.
I
You know what I
could have
mean?
been making profit instead of break even. And actually coming to
Exactly.
that point, there's this
Yeah.
what does Brian keep saying? He says just because a trade runs for you doesn't mean that it's the right trade, right?
Correct.
That's exactly
Yes.
what we're
You
talking
build
about.
bad habits. Yeah,
Hmm.
because you're going to build bad habits because you're all the chemicals in your brain. And I'm trying to learn more. Me and Riley are both like really learning about the different parts of our brain because we are so fascinated by this. But the reaction from a win in your head, that feeling will be created whether the trade followed your plan or not. So you have to literally erase all of that feeling, get rid of it completely, and reprogram it to be attached to the process, the rules that you're following, rather than the outcome of the trade. And that would prevent that. But that's difficult. That's why we're making these videos. That's why you and I spend so much time coaching people every day. You know what I mean?
Yeah.
Because this is where we're trying to work new traders through. But I think today's video really does cover a lot. And I'm hoping that it kind of ties the divergence training video together for everybody watching to show you how we're using it in the real world and how it's being used with the A1 entry, which is our basic, where everything is built off of. That was the original entry signal. So they all do go together. But here you guys got to see the divergence in action. So Alex, I appreciate you, brother. Always. Thank you so much. And for everybody that wants to reach out to Alex, you guys will find information for that right below the video.